Good afternoon, folks. It's May 19th, 2020. The markets are closed right now. Let's start with top view analysis of what's really going on. From a cycles perspective, the 45 on dailies had turned up. 90 is trending down, but we surpassed that. But the key thing here is the 360 is turned up. It turned up on April 13th. The reason we've been churning is the 45 wasn't really turning up fully. At this point, we have, on the first attempt, we crossed the 360, but backed off because the others were not positive, declining 90 and declining 45. So we basically got set in a range uh, roughly between the 45 lows and the declining 90. We have actually exceeded this point. So at this point, what the market's trying to do is actually stabilize around 360, which comes in at 29.24 on this one. We very well know the May mob is actually 29.11. So in essence, similar level, and basically we're trying to hold on to that. So maybe some more churn into Wednesday, and then basically the expectation is we shoot off from here towards 3155, I believe. And like I said, as each successive target is hit, the market could very well keep moving higher. It is just the wave degree at this point that could produce that kind of a move. So we'll tackle it as we go along. Looking at the monthly wick cycles, at this point we have three closes above the midline, and the midline comes in at 2870.33. There is no reason for the market to be below this, so you need to remember that. We haven't had a touch on the upper line, and now the target given by SSG appears here. So the monthly wick cycles are positive. Everything is rising. From the daily cycles, the expectation was to descend into the May mob from the Monday highs. Of course, once again, we were tricked by the residual cycle strength from Friday, which appears as a gap on the next trading day, typically the weekend, Sunday, Monday. So it's almost as if that price gain or loss belongs to Friday, the previous week. And then the action for this week starts with this week's cycles. So last week we expected reaching 2905 through 2915 on the ES, or roughly 2921 on SPX. And if you recall, Monday actually opened around 2930-34, right above 2921. So that action was belonging to Friday, and now the market should refuse to move below 2912.945. If it does, then basically we have these levels to watch out for. This should not give up. It's kind of similar to the level we had from the monthly cycles. And so once again, this model is based on SPX cash. So it completely disregards the futures action. So even though we got a high over 2969.03 in futures, you don't see that in cash. It did not happen. And here's the bar for today. I had a pretty similar bar for today's SPX. Tomorrow's bar, I expect reaching the midline. However, there is some weakness at today's close. So I think we're gonna range trade between 2912.95 and 2950.79. So this is where you notice some of the failures. And let's put this on. There's a failure, but then there's a positive. The close is not so positive. So to to basically compensate for that, we already have an after hours low. And a lot of the time, these after hour lows end up becoming the lows, because if you look at it, the daily pivot today is higher than yesterday's center of gravity. So the dailies are firmly moving upwards. And the May mob is right here, 2915.45 from this system. Okay. And the midpoint from here is 2881, which is 2874 ESM. And again, in general, 2874, 2870 through 2881 should not give up. Okay, keep that in mind. From the strategy grid, we have a firm buy of 2992 with a target of 2992.74. We have hourlies on this sell, and to compensate, we have a lower load after hours for that. The hourly sells, the first support is 2916.19. If this was real-time system, which is kind of my game plan with the recoding SmartP, then the next target would appear. But for now, the supporting target after hours is 2916.19. So far, we have 2919.2. From these degrees, we had the following targets, all of them printed overnight. Okay, and then the uber critical 2911.71 from this system, similar to 2915 here. Cycles wise, you look at this, and obviously the gap confuses the cycles, but in essence, we had an up move finishing on Monday. It finished on Monday night, and then 3 a.m. highs, and we have roughly similar highs, and a down cycle into the close. Obviously, we're not headed that deep as was expected on Sunday, because we overshot by 60 points. So if you were to add the 60 points to my expectation of 28.48 over the weekend, you come up to 29.08 on SPX, give or take. So from here, I think the green path is still being followed, and we're not going to take the alternate red. We should see a move up, and I believe this should be around 29.50 as I demonstrated here. And then we should get a down move on Wednesday. So that's the game plan. Figure out how you would accumulate, and also keep in mind the firm um, stocks you would like to use. So the setup that I'm offering for today is buying Tuesday close against these pivots, and TMAR on a rise towards 29.50. I believe the futures will open higher, or the market will open higher tomorrow and then give back, or alternatively higher into pre-market, give back into 10 a.m. and then start moving upwards again. So, as a word of caution, this is the best interpretation of cycles I can offer. But in case you're uncomfortable taking a position from an unconfirmed buy, which is a full buy on this system, you could very well wait for the Wednesday retest. I would think that if all of it pans out, at the risk of repeating, higher into open pre-market, and then sell off into 1010, and then resume higher. Okay. If I spot any changes to the cycles, short-term cycles, intraday cycles, I'll let you know. And and here's the 1 p.m. high, closing high that I offered as a stop intraday, and we got the back down. All right, folks, good luck.